There was very heavy volatility in the stock market in the previous week. Gold lost 9% within a day and silver lost 30% within a day. Other than that, the S&P 500 managed to breach the 7,000 psychological mark that it was trying for last few months. However, it failed at 7002, which was my calculated level, and then we have seen a very heavy profit booking in the S&P 500. However, there was not much movement in the Dow Jones. Dow Jones is still trading within the consolidation, and this movement in the S&P 500 is now indicating pressure and also is indicating that there are chances that the S&P 500 can enter into the consolidation. This is why S&P 500 is expected to remain in between 6,700 in the bearish side and 7,100 in the bull side. The bullish side will remain limited and the bearish side will remain heavily open because of the crash in the commodities, gold and silver, and then the pressure on the stock market. In order to understand why there is the pressure on the stock market, we need to understand why the S&P 500 hit the 7,000. The S&P 500, although it did not hit the 7,000 on 27th of January, but it actually breached the previous all-time high and then created some room for the 7,000. And the most important part is that the S&P 500 was holding in this condition, the bullish condition, on Tuesday 27th of January, even though next day on Wednesday, the FOMC event was there. But because of the breach of the previous all-time high and the formation of the new all-time high on Tuesday, it was now clear that S&P 500 has come into the condition to try for the 7,000. And then through a heavy gap up open, the S&P 500 hit and breached the 7,000 and failed at 7,002. 7,002 is my calculated level. And then within the first hour on Wednesday 28th of January, it came into the profit booking condition. So this heavy profit booking that you are seeing on Thursday 29th of January, it actually started from Wednesday 28th of January. This is why in my pre-market analysis, then in my first update, then in my midday update, I have repeatedly mentioned the profit booking, that there are very, very heavy chances that there will be the profit booking condition. Then this was confirmed when the first hourly candle formed. And then next day in my pre-market analysis, I have mentioned that because the Microsoft on that day pre-market, it was 7% down. So we have seen that immediately after open, S&P 500 came down, the profit booking was there. It was clear that this heavy fall that was there within the first hour on January 29th, it will be handled in between 688x and the 691x, this the zone. So whatever will be the fall, it will be handled at this the zone and then the intraday recovery. Though the recovery will be limited to the 695x. And then the same pattern we have seen on Friday. However, Friday, the primary reason for the failure on Friday was the 695x level, because the first hourly closing and the subsequent hourly closings were below 695x. So in my pre-market analysis, I mentioned that if there comes the first hourly closing below 695x, then we will be seeing more pressure in the S&P 500 and there will be chances for the 6,900. However, any fall will be handled by the 688x. So now how all of this is going to work in the coming week, whether the S&P 500 will first move up or if it will first come down, what will be the saturation levels, the support zones, the resistance, etc. How we are expecting S&P 500, Dow Jones and Nasdaq to move into the next week. So all of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of February 2nd. Means from February 2nd, which is Monday, through February 6th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. First part is the technical part. In the technical part, I will show you the technicals, the indicators, okay, if there is any saturation, if there is absolute bullishness or bearishness, okay, etc. Technical part, okay, I will discuss on the weekly and the daily charts. Second part of the agenda is the probable movement. In the probable movement, I will discuss the conditions for the bullish movement, conditions for the bearish movement, support levels in the bearish side, resistance levels and zones in the bull side, and the probable case of the consolidation. And also in this part, I will discuss the gold and silver. Means how much more fall or recovery we are expecting in gold and silver in the coming week. And what will be the impact of the bullish or bearish movement of gold and silver onto the stock market. So I'm going to start with the technical part first. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And in order to get all of these daily precise updates of the S&P 500 every day from Monday through Friday, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the technical part. In the technical part, I will discuss the weekly and the daily chart. I am going to begin with the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay. So on the weekly chart, let's first discuss the candle. If you notice, it's a normal bullish candle. Okay, no spindle or nothing. It's a normal bullish candle. Okay. Also, the closing of the candle is above all of the moving averages, and also the open and closing of the candle is above the closing price of the previous candle, indicating bullishness. What? Indicating bullishness in the market. Okay, but because it has failed to close above the previous all-time high, this means that the market is still under pressure. Even though it is bullish, but it is still under pressure. What does this mean? This means that on Monday, okay, a gap up or gap down cannot be confirmed, but there will be an initial or intraday bullish movement. Means even if there comes a gap down open and the market comes down, then also we will see recovery, just like what we have seen on Thursday and Friday. Okay, that kind of recovery. This recovery may be heavy or may be limited, but it will be there. Initial or intraday bullish movement on Monday. Okay, now let's verify the same through the candle of the Dow Jones. This is the last weekly candle of the Dow Jones. It is bearish. Okay, of red color, bearish, good bearish candle, although the closing is still above the moving averages, but the closing is below the open and the closing price of the previous candle. Okay, this is indicating bearishness. Okay, and this is not indicating a gap down open. Okay, but it is indicating an initial or intraday bearish movement on Monday. So this bearish movement, initial or intraday bearish movement through the candle of the Dow Jones is just opposite to what we have seen, the initial or intraday bullish movement through the candle of the S&P 500. Whenever such kind of situation is seen, then this means that the market is trading under pressure. Now this bullishness, bearishness, gap up, gap down, this will be more clear through the technicals and also through the daily chart. So now let's analyze the technical indicators on the weekly chart. Technically, S&P 500 is bullish through the moving averages, Bollinger Bands and the Ichimoku cloud. No change in the bullish trend. Absolute bullish trend is here. However, now, now there is a problem. Not the absolute bullish trend. The problem is that MACD was bearish, is bearish, and now the stochastic RSI is also bearish. Okay. Well, this was something it was not supposed to happen. Okay. And this does not favor the bulls, it favors the bears, because now the stochastic RSI is bearish. MACD and stochastic RSI both are bearish. This means that yes, indeed there is pressure. Technically there is pressure on the market. Now the bull side will be limited, dull, struggle. Okay, bearish side will remain wide open. Not a problem. Okay. This is through the weekly chart, but still we will have to see the daily chart. Okay, then only something concrete can be said. As of now, no saturation, nothing. So this means that the S&P 500 is now 60% bullish. 60% bullish. Is it still in the bullish trend? Long-term trend is still bullish, but now it is weakening. Now it is weakening. Okay, let's verify the same through the Dow Jones. Dow Jones, almost the same condition. Dow Jones is bullish through the moving averages, Bollinger Bands and the Ichimoku cloud on the weekly chart. And then the Dow Jones is now, it has come very near to like in a condition wherein we can see a bearish crossover in the MACD as early as on Monday. Okay, a bearish crossover in on the weekly chart in the MACD of the Dow Jones. Stochastic RSI is already bearish. If this goes bearish, if MACD goes bearish on Monday, okay, on the weekly chart, then this will support the bearishness that is there through the stochastic RSI. Both of these indicators will align bearish, and S&P 500, in case of the S&P 500, stochastic RSI, MACD are already bearish. Then this will support the bearishness in the S&P 500, and in this manner the entire stock market will come under very heavy pressure. Okay, heavy pressure means there will be sudden fall, sharp fall, heavy gap down open, heavy profit booking. That kind of condition will be there in the stock market. Okay, so this will be very much clear on Monday whether this MACD is giving a bearish crossover or not. Okay, if it gives, then there will be very limited chances for the recovery or the bullish movement. Whatever bullishness will be there, okay, that will be used to short and then the fall. Okay, so this will be very much clear on Monday itself, right? So well, through the technical indicators, S&P 500 as of now, because the MACD is still holding, bullish, so the 80% bullish, Dow Jones is 80% bullish on the weekly chart. Now this is 80% bullish on the weekly chart, and S&P 500 is 60% bullish on the weekly chart. What does that mean? This means that in the long term trend is still bullish. There is no change in the long term trend, is still bullish. Okay, but it is showing weakness and is expected to come under a short term bearish trend, short term bearish cycle. Okay, so long term bullish trend, short term bearish cycle. Now this will be more clear through the daily chart. So let's move on to the daily chart. So guys, this is the daily chart. Now guys, before I discuss the daily chart, so far if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And there is one more important thing, that I am offering the programs, okay, on this, the learn now pay later, means it will be purely on the goodwill basis. Okay, you can enroll into the program, you can learn the hacks, technicals, options trading strategies, premium calculator, or whatever I am offering in these through these the programs. Okay, it will be purely on the goodwill basis, and the same is applicable on this, the S&P 500 knowledge transfer program. This is very extensive program. All of the hacks, stock market movement predictions, price predictions, support and resistance levels, okay, for 5 years, and the strategies, all of these are the part of this S&P 500 knowledge transfer program. So the same learn now, pay later. Now let's analyze the daily chart. Okay, so daily chart means one candle represents one day, not 1 week, okay, or 1 hour. One candle means one day. Let's first analyze the candle. Okay, this is the last candle formed on Friday. The closing of the candle is above the moving average, right? Secondly, the body of the candle is above, within the first 50%, means above the half of the candle. The open and the closing price of the candles are above the 50% of the candle itself, means heavy intraday retrace. Okay, so this candle is not indicating a gap down open. This is indicating a little or normal initial or intraday bearish movement, and also recovery. Means even if there comes a fall, then also it will be in a condition to recover. Now whether this recovery will be absolute or heavy, or will be normal, okay, or limited, this will be known through the levels, okay, and the zones. But this is what this candle is indicating: limited fall, initial or intraday fall, limited fall, but recovery. This is the Dow Jones. This is the last daily candle of the Dow Jones. Now if we analyze the candle, the closing of the candle is within the moving averages. Secondly, the open and the closing of the candle are above the 50% of the candle itself. All of this are indicating a limited normal initial or intraday bearish movement, but again a recovery. This is indicating limited fall but recovery. The same we have seen in the S&P 500. Okay, this means that through the daily chart, through the weekly chart, okay, everywhere it is, the condition is that on Monday, okay, there will be weakness and there will be fall, but there will be recovery. Okay, whether this recovery will be absolute or heavy, This will be known through the levels and the numbers that I will discuss in the probable movement section. But for now, this is the condition. Now, this will be more clear through the, we will get some more information through the technicals. So let's analyze the technical indicators on the daily chart of the S&P 500. Technically, the S&P 500 is bullish through the Bollinger Bands, through the moving averages, through the Ichimoku cloud. And because of this intraday recovery on Friday, S&P 500 managed to save itself through the MACD. MACD is still bullish. Okay, if there comes any kind of red candle or limited green candle, then MACD will turn bearish. So again, just after open on Monday, it will be very much clear that on the weekly chart of the Dow Jones and on the daily chart of the S&P 500, what is happening to the MACD. If on Monday, the MACD on the weekly chart of the Dow Jones turns bearish, and also the MACD of the S&P 500 on the daily chart turns bearish, then we should be ready for the bearish movement. Okay, then consolidation will be, means there would be less chances for the consolidation because market will come under heavy pressure. Okay, and it won't be able to hold for long. Okay, because of that pressure, then we will be seeing more fall in the market. So on Monday, okay, within the first half, this will be very much clear, and then by the time the candle closes on Monday, okay, picture will be clear for the entire week, for the rest of the week until February 6th, Friday, whether for the rest of the week the stock market will trade bearish or bullish. This will be very much clear by Monday end of the day itself. Okay, so for now, the S&P 500 is 80% bullish on the daily chart. 80% bullish on the daily chart. Okay. Let's analyze the technicals of the Dow Jones. Technically, the Dow Jones is neutral through the moving averages. Again, neutral through the Bollinger Bands, bullish through the Ichimoku cloud. Dow Jones is not good. It is heavily bearish through the MACD, heavily bearish through the stochastic RSI. Well, Dow Jones is more bearish. Okay, is bearish. Dow Jones is like 70% bearish on the daily chart, and this is really bad because what is helping the Dow Jones to hold is the consolidation zone. As long as it is in the consolidation, okay, even this the technical, the bearish technicals won't be able to do much. Okay, because it is in the consolidation. Once it comes out of the consolidation, then what will happen? Then bearish breakout. Bearish breakout. When there comes a bearish breakout, okay, then there will be fall and only fall, only and only fall. Okay, so that will happen when there will be the bearish breakout. Okay, when this bearish breakout can happen? As early as on Monday. Okay, so Dow Jones is more bearish. Dow Jones is like 70% bearish. Okay, on the weekly chart it is marginally bullish. Okay, otherwise not good. Overall the picture is that through the weekly and the daily chart of the S&P 500 and the Dow Jones, it is clear that market is trading under pressure. There is pressure on the stock market, and the stock market is in a condition to lose heavily. But guys, whatever is going to happen or whatever will happen, I will keep you posted. I will keep you updated through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. I give the pre-market analysis before the open of the stock market, first update after 1 hour, midday update after 3 hours, then the final update 1 or 2 hours before the closing of the stock market. And that's not all, because I also give the opportunities in the premium stocks of the US stock market 5050 to 8080, 50 to 80 premium opportunities to my Patreon community members. And that's not all, because I also give the midweek update, and this is the video technical analysis. In this video technical analysis, I mention all of the bearish bullish conditions. Okay, most likely, okay, the movement, the precise movement that we are expecting to happen with the precise levels and zones, okay, to my Patreon community members. It is generally given every Wednesday. So whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this button which says membership options. And when you click on this button which says membership options, then you will see that there are these three levels: level 1, level 2 and level 3. Level 1 and level 2 are same. The only difference is in the geographical location, and level 3 is the premium level. Means whatever you are going to get into level 1 and level 2, by default you will get here in level 3, and also you will get the premium opportunities 5050 to 8080 every month. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, as well as the stock market opportunities in the premium stocks and the midday update video technical analysis. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I'm going to discuss the second part of the agenda of this S&P 500 weekly technical analysis, and here I will give you the probable movement. Probable movement means what is expected to happen in the US stock market, okay, especially in the S&P 500 and Dow Jones in the coming week, the week of February 2nd, means from February 2nd, which is Monday, to February 6th, that will be Friday. All of that I'm going to discuss here in this the probable movement section. Now, first come first. Okay, almost now the earning season is almost over. Okay, all of the giants have released the earnings. Only Google and Amazon, okay, they will be posting the earnings in this the coming week. First, the Google will post the earnings, I think, on Wednesday. Okay, and then Amazon will post the earnings on Thursday. And the earnings will be released after market hours, means its impact will be seen on Thursday and Friday. But because Google and Amazon, okay, they do not have this much of potential to trigger heavy fall or heavy bullish movement. This means that whatever the movement that will be there through the stocks, okay, unless there is very heavy like 20% fall, 15% fall, okay, or 10-15% rise, okay, there will not be any significant impact on the S&P 500, though there will be impact on Nasdaq, okay, because these two stocks, they have heavy weightage in Nasdaq, but there will be limited impact on S&P 500, and there will be almost no impact on Dow Jones. Okay, so S&P 500 and Dow Jones, these are the two biggest indices. So these are the earnings, and in terms of the data, next week on, I think on Tuesday, the JOLTS job opening data will be released, and then on Friday is most important, because Friday non-farm payroll data and the unemployment data will be released. Okay, so we will see heavy volatility on Friday, okay, because of the data, and then the impact of the earnings of Amazon, okay, only if there is more than 10% fall or 10% rise in Amazon, otherwise limited. Okay, now in terms of the movement, what we can see here is that S&P 500 is again and again trying to recover and to sustain above the moving average. However, this will not help much if on Monday, as I mentioned in the previous section, if on Monday, okay, the daily chart of the S&P 500, you can see that this is the MACD of the S&P 500, okay, daily chart. If on Monday there comes no heavy, we need heavy bullish candle on Monday, heavy bullish candle on Monday in the S&P 500, okay, and only when that happens, then only this will not be allowed. This bearish crossover in the MACD will not be allowed. Otherwise, in all other conditions, there will be the bearish crossover. Okay, and as early as like in my first update on Monday or in the comment section, okay, after the open of the stock market, I will mention, okay, whether we have seen a confirmed bearish crossover or not. Okay, but when there comes the bearish crossover, okay, then this will trigger fall, okay, fall or pressure. Now whether now this fall, whether this will be heavy or limited, okay, this will be known through the levels and the technicals. Okay, other than that, at the same time, on the weekly chart, the Dow Jones, okay, if the Dow Jones fails to see, as of now Dow Jones is under pressure but is holding because of the consolidation. Okay, but if Dow Jones fails, or if Dow Jones gives limited bullish candle, limited green candle, okay, So only and only if there comes good or heavy bullish candle in the Dow Jones and in the S&P 500 on Monday, not Tuesday, Wednesday, on Monday, okay, the bearish crossover in the MACD will not happen, okay, rather it will remain and sustain bullish. Okay, this is the only case, good and heavy bullish candle. Otherwise there will be, and once there comes a confirmation of the bearish crossover in the MACD, okay, then we are not alone. Okay, there are these thousands of traders, even the big ones, okay, they are also looking into the technicals, because when they see and when everyone see that there is now the confirmed crossover in the MACD, and at the same time when the stochastic RSI is also bearish, now this is seen on the weekly and the daily chart, so everyone will then come into the selling position, in the selling position, in the selling condition, okay, and then we will see the selling in the market. Now if you notice, as of now, S&P 500 is holding, sustaining and giving closings back to back above the 691x. Okay, 691x is good and the heavy support zone. Okay, and on Friday also, okay, and then again the same on Thursday also. My Patreon community members have asked me repeatedly again, okay, that it is sustaining. Okay, on Thursday, it was sustaining above the 691x on the hourly closing basis. That is why I mentioned that as long as it is holding and sustaining and closing above the 691x, the zone, on the hourly closing basis, there will be chances for the recovery or the bullish retrace up to the 695x level. And we have seen that in last 1 hour, very heavy, bullish recovery. The same was seen on Friday also. Friday it was struggling, but again it managed to do so. This means the 691x. This again means that if the S&P 500 loses the 691x, there comes continuous hourly closings below 691x. This means that it is under pressure, and now we should be ready to see more fall, okay, or pressure. Now, what will happen when this fall will be there? Okay, so as of now, you must understand 691x, okay, repeatedly I mentioned, then comes the 695x, okay. 695x is the level, 691x is the zone. Now for the 7000 to happen, 7000 can still happen, okay, because the long term trend is still bullish. S&P 500 is in a good bullish condition, okay, not good bullish condition, it is weak but still in the bullish condition. But for the 7000 to happen, there must come back to back consecutive, okay, back to back continuous closings above the 695x. If that does not happen, then there will not be any 7000. Okay, for now, in the near term, it will not happen. Okay, the role of the 691x is to help the S&P 500 to try to recover the 695x, right? So as long as it is sustaining, holding and closing above the 691x on the hourly, 4 hourly daily closing basis, okay, the S&P 500 will remain, okay, heavily in a condition to recover the 695x. Okay, once the 695x is recovered, then it is free to move into the 7000. Okay, now there is a problem in the 7000, because 7000 will not be easy. Why? So it failed at my 7002 level. 7002 level, this was not a heavy level, but still the S&P 500 failed. Okay, so I was mentioning the 7002 each and every day, okay, before Wednesday, that 7002, okay, it will define whether there will be movement in the 7000 or not. Okay, this is the calculated level. Now because the 7000 S&P 500 failed at the 7002 level, this means that the entire 7000 range, okay, means from 7000 to 7100, this range is heavy. Okay, why? Because just after 7000, no, not just after, but after 7002, there comes this the heavy resistance zone in the 7000. Okay, S&P 500 will test and will fail. So S&P 500 was supposed to fail in the 7000. This was nothing new. We knew it, okay, even 1 week before that this will happen. Okay, this is the 701x zone. Okay, so this zone will then, zone will trigger the fall, good fall. Okay, and if for any reason it recovers, okay, this is the zone, then there comes a very heavy zone. Very heavy zone after that, where 100% there will be the fall. S&P 500 will not be able to hold because that zone is so heavy through all of the technicals, calculated numbers, that S&P 500 will come under the profit booking condition and we will see heavy fall. This means that even if it comes into the condition of when it recovers the 695x, okay, closings are above 695x, okay, although now chances are less, okay, or limited. Why? Because of the pressure through the technicals. But still, if it happens through any known or unknown reason, then also the 7002, it's strong. Then comes the 701x, okay, it has to fall. Okay, so there is already very heavy resistance level, then the zone. After this, there comes very heavy zone, okay, within the in between the 7000 and the 7100, and S&P 500 is already, it is predefined, okay, that S&P 500 will fail. Heavy profit booking will be there, it will fail. Okay, but as of now, there are no such condition or chances, good chances that it will be able to move to this zone, because before that it has 7002 level and this is the zone. Okay, so as of now, the bullish side, okay, it can happen, not a problem, but for the bullish side to happen, all daily closings must be above 695x. Okay, not just the daily closings, all hourly closings and the 4-hourly closings continuously must be above the 695x, then only this will happen. And if all of this happens, moves to the 7002, then there must come closing, daily closings. Before the daily closings, hourly closings. Okay, why it failed on Wednesday 28th of January? Because there was no hourly closing above 7002. Right, and then the first hourly closing was itself, this created a profit booking condition. That is why immediately in my first update I mentioned that this is perfect for the profit booking, the first hourly candle. This means that now the bullish side will be limited to the 7002 itself, and at the same time there will be the fall. Only because the FOMC event was there, that is why the profit booking, it may not be realized, but it will remain into the picture, right? This means that the entire 7000 range, means from 7000 to 7100, okay, it is filled with heavy resistance levels and heavy resistance zones. And S&P 500 okay, it will have to again and again, okay, to struggle and to fail. Now, to make the matter worse, there comes the gold and the silver. Okay, gold and the silver, what we have seen on Friday. Okay, silver lost how much? Silver lost 30%. Within one day, silver lost 30%, settled at 26% loss. Gold lost intraday. Gold lost not intraday, but it lost 10%, settled at 9%. Now, this heavy selling, some are saying that this will ease the pressure on the stock market. Okay, because now it is clear that who will be the next Fed chairman. Okay, whereas some are saying that because of this heavy fall, now there will be more pressure on the stock market because there will be kind of gold rush. Gold rush means that when the metals are coming down from the highs, then people will think that, see, gold and silver, these are the metals, okay, for thousands of years. Okay, people, so this is the real money, gold and silver. Okay, so when people would want to buy. That is why recently the central banks, okay, almost of every country, then the big hedge funds, they have bought the physical gold, okay, physical silver. That is why there was very heavy bullish movement in the gold and silver. Okay, now when it is coming down, it is coming down heavily, then the economic meltdown is there. Okay, chances of correction, recession in this year are very heavy. So this means that when gold and silver, okay, these metals comes down, then people would want to buy the metals. Why? To save, okay, for the hedging, okay, for the hedging purpose, they would want to buy these metals, because metals are giving more returns as compared to the stock market. Stock market looks risky, economy looks risky, but the metals are giving the safe haven. So this means that chances are more for the fall, the pressure, because of the fall in the gold and the silver, okay, rather than the bullishness. Now the same are seen through the technical indicators. Okay, so you have seen that on the daily and the weekly chart, there is clearly weakness. Long-term trend is bullish, but still the stock market is bearish. Okay, and on Monday, as early as on Monday, this will be further confirmed whether the stock market is going to lose more or not. Okay, because the MACD will then tell us if it is bearish, this means that the stock market is going bearish. Okay, then by the end of the day, when the session is closed, then this will be further confirmed. And okay, so let's first complete the bullish cycle. Okay, then I will cover the bearish cycle. So bullish cycle, yes. Now the bullish support, the entire US stock market, S&P 500, Nasdaq, okay, and everything else is getting the bullish support through the Dow Jones. Why and how? Because of the consolidation. Dow Jones is in the consolidation. Okay, in my previous weekly technical analysis, I have mentioned the same. It is under consolidation. As long as Dow Jones is trading under consolidation, whatever the fall will be there in the market, it will be recoverable. If the market try to move up, then again it will fall. Okay, so there will be limited up down movement there, but this will be limited. Fall will be recovered and bullish movement will be retraced. Okay, because the Dow Jones is not giving any significant movement. Okay, now we are waiting for the breakout. Now for the breakout, okay, this is very special breakout. Why and how this breakout is special? Well, this is special in a manner that if for any reason, if there comes a bullish breakout, means in the bullish side there comes the breakout in the Dow Jones, then no matter what the technicals are saying, okay, what the economy is doing, okay, what means, then nothing will matter. Then there will be a short-term bullish rally. What? A short-term bullish rally. Okay, because this is a technical event. Whenever there is a breakout, okay, then blindly, okay, people will buy. And this is what actually happens when there is a breakout. Okay, and in that case, S&P 500 will be in a condition to move towards the 7,000. But S&P 500 will fail and fall. Yes, this is confirmed. Okay. So bullish breakout will be there. It will help the S&P 500 Nasdaq to move up, but because of their own conditions, especially the S&P 500, there will be the fall. Okay. Now, what if there comes a bearish breakout? As of now, chances are more for the bearish breakout. Exactly the same will be seen. Once there comes a confirmation of the bearish breakout, then everyone will sell blindly. Blindly they will sell. When they will sell, the entire market is already under pressure. Okay, then there will be very heavy fall. Okay, but as long as the Dow Jones is trading within the consolidation, okay, there is no problem. Whatever the fall will be there in the entire market, that will be recoverable. And at the same time, the bullish movement, okay, that will be limited. But as of now, the problem is that the Dow Jones conditions are not good for the bullish breakout. Okay, it is coming under pressure. And on Monday, if it comes under pressure through the MACD, okay, then most likely in the coming week there will be a bearish breakout. Bearish breakout means very heavy selling. Okay, now how this heavy selling will impact the market? Again, here comes the 691X. Okay, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And once again, guys, if you want to learn the options, strategies, calculator, and premium hacks, technicals, okay, then on the goodwill basis, I am offering learn now, pay later. So you can participate in any of these programs, okay, and I will teach you all of the strategies, okay, hacks and everything. So you will find this on my Patreon page in the shop section. When you visit the shop section, then you will find all of these, the products. However, if you want to gain the in-depth knowledge, okay, the technical knowledge, okay, and means for the near future, you want to trade confidently, okay, then comes the S&P 500 knowledge transfer program. So if you are interested and you want to learn, then simply send me an email. So the bearish side is 691X. Okay, the initial trigger will be the 691X zone. Okay, then immediately after that comes the 6,900. Okay, now 691X. Okay, and then 6,900. This is so heavy that once we start to see the hourly closings below 6,900, there are continuous hourly closings, the 4-hourly closings, and if somehow there comes a daily closing below the 6,900, what does that mean? This means bearish and fall and profit booking and bearish MACD and everything that is bearish. Okay, and at the same time we will have to look into the Dow Jones to see if the Dow Jones has come into the bearish breakout condition or not. Because if the Dow Jones comes into the bearish breakout condition, then we must be ready for a heavy fall, a short-term bearish cycle. However, remember, short-term bearish cycle does not mean that the market has turned bearish, negative, okay, or so. No, the long-term trend is still bullish. Long-term trend is still bullish. There is no change in the long-term trend. Okay, for this, the change to happen in the long-term trend, okay, it will take around 1 month, a minimum of 1 month. Okay, so this means that if the change start to happen now, although the change, okay, it starts from the daily chart, not the daily chart. It starts from the lower level charts, hourly charts, 2 hourly charts, 2 hourly charts, 4 hourly charts. It starts from the lower level charts, then is replicated onto the daily chart, then is replicated on the weekly chart. Okay, it will take time. So because once the long-term trend changes to bearish, this means that we are going to see the correction and then probably the recession. These will be the scenarios whenever the long-term trend change. Okay, but as of now, there will be the short-term trend change. Short-term trend will be bearish. Okay, this short-term can last like for 1 month, 1 to 2 months. Okay, or around generally it is around 1 month, 1 or 1.5 months. That's it, maximum. Okay, that is the maximum time, because after that the correction comes into the picture. Okay, so, and one more thing, as long as the fall in the S&P 500, okay, is less than 10%, fall is less than 10%, everything is fine, everything is good. What is 10%? High was 7002. Okay, 10% of the 7700 means as long as all of the movement, all of the closings are above 6300 mark, no problem, no correction, nothing. Whatever will be there, it will be the short-term bearish cycle, short-term bearish trend, and well, immediately it will give you an opportunity to sell. Okay, but when it comes to significant levels, okay, that I will mention, okay, in the daily updates, then that will give you an opportunity to buy, right? So in this case, like sell, buy, sell, buy. Okay, once it hits the absolute bottom, okay, then buy, and then it will move up. Now the problem is that once the S&P 500 loses the 691x and the 6900, okay, then what will help the S&P 500 to hold? 685x. 685x is the level, because after 685x there comes the 6800. Okay, so 6900, 6800, 6700, these are the psychological levels. Okay, these psychological levels themselves act as the support and resistance levels. Okay, so 685x is there. Okay, then comes the 6800. Okay, S&P 500 will remain good and will remain recoverable, not a problem, as long as the movement is within the 6800. Once the S&P 500, okay, there comes heavy pressure, okay, may or may not be through the Dow Jones, but once the S&P 500 loses the 6800, okay, and closing is below the 6800, okay, and there is no event in the picture, okay, then we will see more fall and the chances for the 672x, because after 6800 there comes the 672x level, which has the potential to hold the heavy, very heavy fall. Okay, there are the levels, okay, and the zones, okay, in between these 2 or 3, like in between 6900 and the 6800, okay, there is one zone and 2 levels. In between 6800 and 6700 there are 2 levels, okay, and I think 2 zones. Yes, 2 zones are there. In between 6700 and 6600, okay, there are 2 zones, okay, and 1 level. So these zones and levels are themselves are so strong that they can trigger heavy fall, okay, or there's the heavy reversal. But what I'm trying to say here is that as of now, if the S&P 500 loses the 6800 on the closing basis, and on the same day or the next day there is no event in the picture, and President okay, is not saying anything, there is no comment from the president, then nothing will be able to help the S&P 500, and such kind of closing means that the Dow Jones is in the bearish breakout condition. Okay, means that this fall cannot be stopped as of now. This will have to come down in the 6,700. There is a zone. Initially the fall will be handled there, then a recovery 1% or more than 1%, okay, back to the 6,800, then the fall, then to the 672x, then hold, then recovery, okay, 1.5%, okay, but will fail to recover the 6,800, then fall, okay, and to enter into the 6,600. This fall or the bearish cycle will stop, okay, in the 6,600 range. 6,600 range, okay, historically has proven itself. There is very heavy zone in the 6,600, okay, that will be able to absorb all of this, the bearish energy, the fall, okay, and then we can see a long recovery from there. Okay, losing the 6,600 range means that market is going to enter into the bearish, means this is the bearish zone, okay, means we will then expect 10% fall or more than 10% fall. Losing the 6,600 range, or the not the range but the zone in the 6,600 very strong, okay, then most likely it will complete its fall for the 10% and then only it will recover, otherwise it will enter into the correction. How soon this fall, correction or this will happen? Okay, the very early indicator is the Monday itself. The movement on the Monday will tell us, okay, and this Monday will not just tell us about the near future but also will tell us about what is expected to happen for the rest of the week until Friday, until February 6th, because there are some events, technical events, okay, MACD, change in the MACD, closings above or below the moving averages, okay, especially the levels, okay, then the breakout conditions, okay, and the same in the Nasdaq also, okay, Nasdaq is also in the same condition, Nasdaq, okay, it is, Nasdaq is not good, okay, S&P 500 is, see, so far out of these the three indices, okay, three indices means S&P 500, Dow Jones and Nasdaq. Only the S&P 500 is in the best condition, okay. Dow Jones is also good because it is consolidation. Nasdaq is not good, okay. So if there will be the fall, then Nasdaq is the index that is going to lose the maximum, okay. Nasdaq will be the index that will enter into the bearish territory, we can say, okay, in the bearish cycle or in the correction first, okay, before we can see the S&P 500 and the Dow Jones. Most of the times what happens is that Nasdaq completes its bearish cycle, okay, but S&P 500 and Dow Jones, they retrace after giving 9 or 10%, okay, they do not enter into the bearish cycle, okay, whereas we can see Nasdaq has lost 17%, 18%, 20%, 23%, okay. Well, that will be there because of this the case, okay, but for now Monday is important, okay. Other than that, the 691x, okay, 695x in the bull side, 6,900, then 685x. These 1, 2, 3, 4 are very important for the next week, will define the bullish bearish movement, okay. Bullish support, the last known bullish support for the stock market is Wednesday evening when Google will post the earnings, then Thursday evening when Amazon will post the earnings, okay. And again, earnings must either trigger very heavy bullish movement or very heavy fall around 10%, then only there will be some impact, otherwise, okay, not a heavy impact, okay. If there is like 4 or 5% movement in Google and Amazon, that will impact Nasdaq heavily, because Nasdaq is the tech index, but not the S&P 500 and Dow Jones. S&P 500 will remain in the recoverable and sustainable condition, okay, that will be there. Otherwise, irrespective of anything, as long as S&P 500 is holding and sustaining at the key levels and the zones, it will remain bullish, okay. Now on Monday itself, there is one more event, that is gold and silver, okay. We will have to see whether gold and silver are going to continue the bearish journey, okay, or are going to reverse, because if on Monday gold and silver gets a bullish movement, see, as of now, at the time of recording this, the technical analysis, Bitcoin, okay, has is trading like 7% down, okay. Other than that, Bitcoin has entered into the 70,000 range. In the 70,000 range. Earlier, it has sustained at the within the 80,000, was holding, recovered. Okay, but it has entered into the 70,000 range. So you can understand. See, one more thing. Bitcoin. What is Bitcoin? As such, Bitcoin is the crypto. Okay, but why? Why do we look into the Bitcoin? Only to see the sentiments. What? The sentiments. Because if there is very heavy bullish movement in Bitcoin, very heavy fall in Bitcoin, this indicates sentiments, and these sentiments reflect in the equity market, in the stock market. Okay, so when I say Bitcoin is 7% down, this means that on Monday the entire market will remain under pressure. Okay, and if on Monday gold and silver retraces, goes bullish, Bitcoin goes down or marginally down, doesn't matter, then stock market will come down heavily. Okay. And even if somehow the stock market managed to hold, okay, then the MACD of the S&P 500 will turn bearish, MACD of the Dow Jones will turn bearish, then that will again trigger the fall. Right? So there are, as of now, these are not the good conditions. And now there is one more thing. Okay, I think we should be ready for that, the condition. This meltdown, okay, this meltdown that started in the gold and silver, okay, is now being reflected on the Bitcoin. Okay, the same meltdown can be seen, the reflection can be seen on the equity market, the stock market. And if a stock market comes under this a very heavy fall, okay, then the correction or recession we were talking about for the year 2026, this will start now. Okay, means that from the next week itself. Okay, though the corrections, correction cycle is generally like what? Correction cycle is like 3 to 6 months is the correction cycle. Okay, recession cycle is up to 1 year, 1 or 1.5 years. Okay, so this does not mean that immediately there will be 10-20% fall. This means that now it has entered into that cycle. Okay, and now it is going to come down. And what will be the correction and recession numbers for the S&P 500? So let me also tell you that for the correction, okay, correction you can say 25%. Okay, recession is 50%. What is the 50% of 7,000? 3,500. Okay, in the recession scenario, okay, within a time period of 1 year, 1.5 year, okay, 50 to 60% actually, 50 to 60% is the recession cycle. So 3,000 range, entire 3,000 range is the recession scenario. Okay, what will be that? So 25 to 30% or 20 to 30%. Okay, this is the correction scenario. What will be this for the S&P 500? Okay, so this will be like you can say from 5,000 to 5,500. Okay, this will be the normal correction cycle for the S&P 500. Correction cycle, recession cycle. What will the short-term bearish cycle? 10%, maximum up to 6,300. Okay, so if you are planning for the near term, okay, let's say for 3 months or 6 months, then you can look into these numbers and you can accordingly to make your trades or calculations, okay, based on these the numbers. But if you are my Patreon community member, then you need not to worry about, okay, these the things, because every day you are very much aware of, what is happening and what will happen next. So guys, before I conclude, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And there's the program, Learn Now, Pay Later. Okay, details are in the description and also in the comment section. Okay, you can follow those links. Okay, Google spreadsheet you can open. Okay, and the shop section of Patreon. And if you are interested, then you have my email address. Okay, you can simply send me the email. My email address is mentioned in the description of the video and also in the Google spreadsheet. Okay, and guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section.